friends. A short update for Bitcoin, Nasdaq, and possibly the oil market. Today is the opening earnings season, especially for financial and bank sector. That's the reason that now Nasdaq, especially Nasdaq, is coming down or has been started to struggle since yesterday. The JP Morgan stock is falling currently at below the 4 weeks lowest low, meaning trend down, as the revenues for many sectors, the earnings are of course positive. Some came out, but that's reflecting the earnings of the last 3 months. So on the other side, there is also a preview earning or earning for the coming months, and that's not looking too good, known for the financial sector, nor for tech sector, especially tech sector. And we see here at the tick chart that's reflecting the number of buying and selling contracts in live. We see how now this red bearish number is increasing. For example, here for Microsoft we have it. We see now that Apple starts also to go down, especially Nvidia. I was talking about in the last 2 videos. We see now how the number of sellers is increasing. This morning it was something around 1.5, but now we see how many contracts per second, and you have to multiply this number by 1000 are selling, sold or bought. And that's a good measure as a trader if you are a day trader. So not only charts, I mainly look at the charts just for timing and to check again the indicators and trend, and mainly in live trading. Then I switch back to this tick chart, and that's giving me a second confirmation. So to the winners of today especially is AVGO, but struggling. So I guess that limit up has been reached, and that AVGO starts also to correct down again. And also if we look on other sectors, for example, some robust numbers here like Netflix or ASML, but we see now no buyers anymore, right? If the number is becoming slower, meaning that the limit of buying has been reached, that the buyers are not willing to buy more. So the next step will be that the bears, the red numbers, start to come in play. And I wanna show you this morning. This is the position I had on opened yesterday in Nasdaq, near of the highest high support, right? So as we never can exactly tell what is or where exactly is support or resistance levels. We see here that we have, for example, here is the support line of the all-time high. Then above this, prices get off, and somewhere here then we have the all-time high. It could not break, so Nasdaq then switching down, struggling, and then finally below this yellow line, right? So this is then the major all-time high, major resistance line. But it was then at this area somewhere here we had then the major support line, because each time the market came here, found a consolidation and support, and the market went up again to the major. But this line was broken, and since around 8 days, Nasdaq is not able to get above this major all-time high support line. So it was a kind of risky trade, but this risk was calculated, as I told you in my yesterday's video, not only to look on the charts, but also especially in Nasdaq. If I can display it here for you. So at the time as I took that trade, Nasdaq was green, Russell was red, S&P was red, then the dollar was green as the current time now too, and still the euro was not correcting, also in negative territory. It's not changing at this moment. So it was a kind of counter trend, but in a trend, as if we have a downtrend, for example, then somewhere the market starts then to pull back for what reason ever, and then it starts then to consolidate and to fall back again, right? So it was a calculated trade, and I let that trade open, and I put, of course, my stop there at the zone where I guessed I could not get hit, and it was a calculated trade, as I was considering each time the market tries to break that level, and Nasdaq was trapping many buyers, but on the same time the ATR and the volume went down. So that was the argument for me to take then this short trade. And we see that until New York Open, this trade has not worked. I let it open, and luckily my stop has not been hit. This is my stop, or this was my stop, at around 18,420, and then I made then this chart this morning and explained again. So if the move become then into a consolidation, we are still here in a consolidation, and we saw here after breaking of this consolidation 70% probability. We took then the trend shortly before the close. That was the last chance for the bulls, or their 15% chance to raise the price or drive the prices higher. Also after estimated PPI of yesterday's data, but they missed their chances, right? So they had the possibility to go to get higher, but I think the buyers were not willing to make the profit, so some started then to take profits. The volume came back, and that was my second logical argument, that if the price starts to consolidate below and the volume is going down, and ATR, meaning there is no acceptance anymore for higher prices, so sooner or later, latestly after this uptrend of yesterday, we came again to the estimated 70% probability, and that was the consolidation. It was time for me then to sell the highs and then to buy back, for example, Nasdaq at a range low. I did not do that. Instead, I took just the short trade. And then my next estimation was, in case we came into this range, but a volatile, meaning then we make low lows and higher highs, but somewhere the market is limiting, it will be a sign of fight. Possibly the bulls will try then, for what reason ever, to push up the market. And that was then the second step of my strategy, that I said, if I recognize this pattern, then I will then, and I see that the price is coming in direction of the support, breaking out of this range, I will take out then my short position with a little loss, but don't get the market the possibility to hit me at my stop, right? So this is the first protection. The second was, in case the market is moving a little bit down and building a next range, then I will then immediately trail my stop into break even to the upper side of the new range, somewhere here, and then level after level. So I marked it also for traders in Nasdaq chat, why and where we would have been big confluences and expect the reaction of the bulls. And then we would see then how the market is reacting at those areas. If the market is willing to go down, it would be possible that the market is living and near of this support line below, then it turns back. It's something normal, but it tries then immediately to break off above the former support or the current resistance, and then at this time then I would take profit, right? But if it's not happening and the market starts to break down, then this will be then my next step to trail my stop loss immediately above this, right? Meaning then manually to extend my trailing stop into a trailing profit target. In case the market is breaking the levels down like it does at this moment, then we trail back or trail ahead the stop in the second phase, right? So let's see where the Nasdaq is at the moment, and we see Nasdaq has been broken already. So this is my position. I marked it here. So then I trailed my stop here, and we see here the market broke this area, so I trailed it there, and the market tried to get back again here. So I put back my stop above this head, and as I saw that the volume is going down, the market went back, pull back, break, pull back, tried again. At the same time, the volume at this moment is low, and that was the reason for me to trail my stop somewhere here. So at this right moment, and if Nasdaq is breaking, for example, now above, volume comes in at this moment, then I will take out the position then somewhere out here instead of letting my stop get hit, right? So, and this is the strategy, like short selling is working. Nothing new about the market, still the same. We want to see what Bitcoin is doing. And I announced that today I'm not going to take more shorts at this right moment. The reason was I am still short. I have short positions, and at this level where you see Bitcoin has been breaking down, still the market coming down, but what makes me trouble is that we don't have enough bearish volume. So I'm expecting that the market is going then to the low of Wednesday, somewhere around 68,500 to 69,000, maybe to start consolidating there, and then slowly then to get back again, right? Because on Wednesday, if you remember, the CPI low was unfilled, so Bitcoin is doing that, that's just fine. Nasdaq wasn't doing it. That's also the second reason that the Nasdaq dropping very fast down. And what we know about fast market, the faster it goes down, the faster it comes up, the faster it goes up, the faster it comes down, right? So this is the strategy still, because in Bitcoin trading, day trading, I have another strategy like Nasdaq, so another setup. There are some times that the setup of Nasdaq is working also well for Bitcoin and vice versa, but generally I have two different setups, how to trade the Bitcoin and how to trade the Nasdaq. So if you are a day trader, it's not bad if you have 3 or 5 different trading strategies for each market, in case you see if the market is in a ranging phase, for example, like this morning where the bears got trapped, the bulls got trapped, the bears got trapped here, the bulls got trapped here. It short went above 71k, came back, started to break down and then up, and now the US dollar is rising very, very skyrocketing since days, especially since 2 hours ago. This is an explanation maybe that the Bitcoin is under pressure. And also I announced also in the chat that the volume is changing very fast. If we consider this as the whole market, and let's say here are the bulls, here are the bears, right? And each time the volume comes down, we are talking about a bearish volume. Each time the volume goes higher, we're talking about bullish volume. If the volume then we build some mathematical variance, so we can then visualize the volume not only by bars, but we can see on the chart, but also in curves or some other mathematical visual pictures. And each time the volume is in this area, it is bearish, but we can say it is then a very weak bearish volume, right? And each time the volume is here, it would be then bearish but strong, and if the volume is outside of these boxes, then it's extremely strong, and vice versa. Then the weak bullish volume would be here, the strong bullish volume would be here. Is a measure that very soon we will have a very big explosion to the bullish side, and especially at those places in the market, in the chart, if the market, for example, is trying to break a key support line, or if the market trying to break up above a major or very important resistance line, we have always the broadening patterns, and they cause this volume. In this case, it did not happen because we didn't have the broadening patterns, but the volume started to play very crazy. It started to run to the strong bullish part, and then on the same time to come down to the strong bearish. Typically the volume, if you are familiar with the nature how or why volume is important, if we have, for example, a bearish trend somewhere and then the market gains momentum, much more bears come into play, and then the market suddenly drops down, and in this case then we can say that major support lines has been broken. Now the momentum is extreme bearish. We are in a very bearish trend, and then the market starts then a pullback, and then continues then to go its direction, right? So, and at this level, for example, when people are taking profits, some bulls, day traders maybe start to buy the current then local support lines, then it means that the bearish trend is, or the momentum is starting to be slower, right, before it gains again in speed. And therefore the volume at these areas goes back a little bit. It doesn't go to the bullish side. The volume moves to the bearish side, but to the weaker side of the volume. That's the typical nature of the volume. In the same we can say about the bullish vice versa if the market is going up. But in this case, the volume immediately and directly moved up to the strong bullish, and then fell back then to the strong bearish side, and it did it many times, and that was a sign for me something very big is coming. There are some guys who are aggressively buying and selling. The first thought was there are possible some big scalpers who are trying to manipulate other market participants, or maybe some bigger guys who want to price to have the price much more downwards. And then my third thought was the same can also happen. Some drive the prices very high, sell it instantly, take that profit and sell again back to trap the bulls. And in this case, we never can tell who was it really, but we see that the market started to break that very not the key level, but for a longer time, since about 8 days, this region seems to be a key region. So we went down again to the middle of the wedge. I announced it also in my video of the last week, I think the fourth or fifth video. If you go back, 5 videos away, right? I have mentioned that wedge on the daily chart, and also this 69, about 69.80 area. That's exactly the price right now, 69,800. And there we have a region of acceptance of the prices, And it seems that now the sellers are not accepting that price anymore. So they say the price of Bitcoin at this level is very expensive to us. So we want to have Bitcoin cheaper. Let's say, for example, at 65,000. And the bulls say, no, we don't accept it. We think that the price of Bitcoin at around 69,000 is good enough, and that's too cheap to us. We want to sell Bitcoin for a minimum 75,000, 75K. And the sellers say, no, we are not accepting, therefore we're gonna short you. And the bulls say, okay, we don't accept you neither, we're gonna long you. And that's the reason that these aggressive moves suddenly come into play. Is it good for the trend? Of course not. A good trend has lower volatility, and higher volatility causes big risks for both bears and the bulls. Therefore, both have no benefits. So if we are in a trading phase, we see, for example, can we see it here? If you compare these situations here, for example, we see we have here a trend down, but the market comes down. And then on the other side, we see if the market starts to go up. And on the bearish side, we can really good see how volatile the market is. We see that the market is making the difference between the lows and the highs are very big, right? The ranges are almost big, and you can see here, for example, the market is coming down. We have narrow ranges, right? Narrow ranges here. So we see here we have narrow ranges, and then we have a very big move up, and the market falls deeper. So we have suddenly very big ranges, also in the trend down, right? The market disturbs this market structure, but makes on the same time new low. And then also here then the reactions, of course, because many stops get hit. We see here definitely a volatile phase of the market. So that's a trend down, but that's a trend down with high volatility. And then we have here on the other side the trend up. We see here the ranges are healthy, right here. Then the market suddenly moves up, and then somewhere they don't find enough sellers. If they meet, for example, the support resistances somewhere, the market comes down slowly, and then the same game starts again, right? So here, for example, the traders, both bulls and the bears, they have enough time to interrupt their trades and to take profit, or maybe to limit their losses, so to keep it smaller. But here, this phase of the market is not healthy for no one, nor for the bulls. We see here, for example, the bulls started then to buy the market kept back, hide them away, wipe them out, right? Also, if we were bearish, for example, right? Let's say we have been just setting the market here somewhere. Then the market came down, and then we would then trail our stops. Some don't trail their stops. They put it then somewhere here. And then this market moves up, wipes them out, and then on the same time falls down. So both the bulls and the bears get disturbed here in their actions. And behind that are a lot of scalpers with very big money. We are talking here about very big positions. Of course, it's something legal. It's not illegal. But those guys who are causing it, that's the nature of the business, making it for a profit, of course. But I guess these are some who are manipulating the markets, right? With lower volatility. And we can typically say that the volatility of Bitcoin during the last month has been increasing dramatically, last not lost, because of all that hype around playing or is surrounding Bitcoin and the Bitcoin market. Not only Bitcoin, but also we can see now the Nasdaq market. So if we compare the Nasdaq market, the chart of now, with the chart of 1 year ago, Nasdaq is like a garbage, right? So I can show it, and we see here during the last days how the Nasdaq, it's not anymore trend, right? We are talking about a range trading, and we are talking here about very big volatile ranges, and behind that are almost the tech stocks themselves to buy back massively their stocks, and on the other side big traders who are shorting that stocks because they have no trust anymore what the companies are reporting, right? A lot of reports are fake. There is no trust anymore. The global financial situation is very dark. And last not least, the mistake of those companies is that they have started to buy much more Bitcoins, that way to hide all those negative numbers. I'm not talking that it's a bad action to buy the Bitcoins for the companies, of course, because they have also many other foreign currencies as reserves. The problem is that way they try to hide many important factors, what is important for the investors, why the investors are not traders, because the trends are made by the long-term investors. And if the long-term investors start to go away, the trend interrupts and it starts to fall down. And that's the reason that also we see here, based on the patterns since many weeks, we are in very big range. How many days is it that Nasdaq did its last all-time high and then fall back immediately? So we are talking here about very, very powerful, financially powerful people who are not interested anymore to invest in the tech companies. Why? Because they have much better sources than you and me. And they know about many reports, facts and numbers better than you and me. And we can then guess that they are going away. We don't, of course, know. We don't need to know who all those people are. But we see that the long-term investors slowly going away from these stocks, especially where the tech companies are. Last not least, because of the Bitcoin hype. For example, SMCI, my favorite stock of Michael Saylor, that I'm shorting every day massively, and If you remember, last week in one of my videos you can watch, I told you what will happen with SMCI, and exactly is now happening. So we are going for this area at around 740 to 800 is the first target, and I want to see this stock going to below zero. If the stock stands at about $1, I will be very angry, because I wanna Michael Saylor lose all his money. I don't like that person. I don't know why, but I don't hate him, right? So, but I don't like him. I don't like this hype. I don't like the lies he's telling to the community. And I don't like this stock. This is a big hype stock, is built only based on Bitcoin. I don't even know that they are saying that they are software company. I don't know what kind of software, and if I never will need that hype software. So therefore we are shorting this company to the ground, and this company is on its best way to the ground. And I guess there are some traders, of course. Saylor has also his own traders, and he's losing permanently money, tax fraud, everything. And that these people, he has some traders that are scalping Bitcoin up and then taking profit down and so on, and they bring then this volatility into the market. That's the reason it's the only logical reason I can explain. If so, the better, because the money he earns, we want to take away from him. We want this stock go to zero. No Michael Saylor anymore on trading floor. Michael Saylor, you can go to McDonald's, sell hamburgers to people, or go to a restaurant, do something else. But I don't want that person trade again. And these are the people we see what will happen. This is the reason, if you start trading, knowledge is very important, communication is very important, exchanging of truth is very important. To me, for example, if a company says, this year we had a lot of problems, but the future plans are this and this, so I buy this honesty, because this honesty of the company in the report, that they don't hide the negative side of the company. Instead, they are telling the truth. That's much more valuable to me than believing in an illusion, right? In a perfect world with it's not existing. So, and this world is exactly trading, right? We don't want to fall back in illusions, and that's exactly trading, right? Trading is against every kind of illusion. Trading is reality, and as long as you stay with the reality of the market, what can happen if you don't have a risk management, for example, if you believe in hypes, if you believe in something what feels good, what has nice pictures, go in Twitter, look at the Bitcoin community there, financed by Michael Saylor. It's not a community anymore, it's a religion, a kind of religion group, religion, I don't know how to say that, right? And these people are very fanatic, and I hate fanatic people. If somebody is fanatic to me with his opinion, I become extremely fanatic to destroy that people by my opinions, right? Not physically, but I like those victims because these people are victims. So they are thinking that by spreading hype and lies in the world, they can control the markets. But they forget that there are also traders with high level of intellect and intelligence, like you, for example, who are well informed and are informing themselves every day more and more, and they don't fall into that trap. All right, so keep it up and have a good trading day. Be aware of trading. It's risky. Keep always your good and risk management and protection of your capital as the first priority. Stay disciplined. Take your time. Sometimes there are times we don't need to trade because we want to see all that hype has gone, and then we take the high quality trade opportunities. Have a good day.